TikTok, ByteDance, its Chinese parent, I believe has to be obligated by Chinese law, changed in 2017, made very clear that every Chinese company ultimately is not responsible to shareholders or customers. It is responsible to the government. And the fact that this can end up, this data or this potential content manipulation can end up in the hands of the Communist Party, that moves this platform into the realm, in my mind, of national security. And one of the things that my law would also do is require the intelligence community to declassify as much information as possible, so it's not just a case of, hey, trust us, that this is a security risk. And I do believe that should this action take place, that the market will create an alternative. All these folks who are making money off of TikTok, social influencers, I believe there will be other sites. There are already some, maybe not quite as attractive yet as TikTok, but there will be other sites. And that can be companies in America, in India, in France, you name it. I think the market will provide that alternative.
Senator Mark Warner, thank you so much for your comments. We look forward to catching up with you after the House hearings and after this has developed even further. And as you talk about other opportunities, I should say, Snap shares up 3.4% in pre-market trading. We are getting some data on the jobless numbers, probably not what this Fed chair wants to see. Michael McKee, handing it over to you.
Unfortunately, for those who are looking for the labor market to weaken, it hasn't happened yet. According to the Department of Labor, 191,000 people filed for initial jobless claims last week. That is down from the prior week, and it is also not what was expected. There was a thought that it would go up to 197,000, but the problem here is that we are not seeing any kind of movement at all. There are a lot of layoff announcements out there, and we're waiting to see what happens and when those will start showing up. But Lisa, and it looks like at this point, what's going on is people are getting severances, so that keeps them from filing for jobless claims, or companies are just holding on to workers.
Mike, yesterday we were talking about how the actual economic data just doesn't matter anymore to the same degree because we are looking at the potential for some sort of systemic event in the banking sector. That's what people are worried about. So at what point does the economic data matter? At what point are we looking at jobless claims coming in lower than expected yet again as being perhaps a sign that we still have a hot labor market?
Well, I think we have to look at it as the Fed being on sort of two paths. One is they're keeping an eye out for what's going on in the banking system. And since they don't know what the effect is going to be, they're going to operate with the data that they have that show a tight labor market and show inflation still high. So they're going to make monetary policy on that basis. So they'll be looking at jobless claims. They'll be looking when we get to April at the March payrolls report. They'll want to see if average hourly earnings are still going up. And of course, we're going to have your new favorite economic indicator, the survey of senior loan officers by the Federal Reserve to see what credit tightening there is. They don't have an exact date for that, but it will come out in April. So we'll be watching for that and break into whatever programming is on when that comes out.
Michael McKee, thank you so much for keeping us posted. We'll be breaking down all the data that people are no longer looking at from here on out until that senior loan officer credit survey comes in. I'm just kidding. People are still looking at this. If you're just joining now, initial jobless claims coming in lower than expected, 191,000 versus 197,000. Continuing claims coming in just a touch higher, but no drama. And this really is just pointing to the ongoing strength in a labor market that perhaps is backward-looking enough for the Federal Reserve to move on. You're not seeing any drama with respect to market reactions. Two-year yields are 3.97%, and you can see that ongoing bit of recovery, bit of optimism in equities as people take a look at the potential perhaps for sooner rate cuts. Joining us now to really parse through the economic picture and when it will matter again, Stephen Stanley, Chief U.S. Economist of Santander U.S. Capital Markets. Stephen, I want to start there. Why doesn't the economic data matter?
Well, I think markets right now are focused on the possibility of further shoes to drop with this banking situation. So, you know, if something major were to happen there, that obviously would take precedent. I think a number of folks are worried that the events of the last couple of weeks are eventually going to create a significant economic weakness. I'm not so sure about that, but if you believe that, then it doesn't so much matter what the data looked like last month or even this month, because there may be something coming down the line.
You don't believe that, Stephen. I want to just build on that. So in other words, you think that what we have seen so far in certain regional banks doesn't necessarily tighten credit conditions enough to act as a rate hike or 2 rate hikes or whatever you want to price in down the line?
I mean, I do think there will be an impact. I mean, I think credit conditions are going to tighten, but I think it will be relatively modest, and it's moving in the direction that the Fed has been hoping to push toward for quite some time. And the Fed has been trying to tighten financial conditions, and to be fair, they've really struggled to do so, I think, to the degree they would like. And as you mentioned before, they're having difficulty getting the economy slowed down. The labor market is still overheated. Inflation is still very high. And so a certain amount of credit tightening would, from the Fed's perspective, actually be a good thing. Now, obviously, too much of a good thing becomes problematic. And so they're hoping to kind of cut this off without further contagion. And that's what we're looking to see as we go forward.
Yesterday, as traders listened to Fed Chair Jay Powell with a split screen of Janet Yellen over testifying in Congress about perhaps not having full-scale deposit insurance for some of those smaller banks, they had one conclusion. This is the end of the rate hiking cycle, and the Fed's going to cut rates pretty significantly going forward. Do you disagree with that assessment?
I do. In some ways, what I've said is we've gotten back to the natural state of affairs, right? I mean, this is how we were aligned for most of the second half of last year and into the beginning of 2023, with the Fed talking about additional rate hikes and then being on hold for a long period of time, and the markets pricing a quick pivot. So we're back to that after a brief dalliance with the markets getting super hawkish. And so I think in some ways it's kind of a comfortable position. But again, it's really a function of a different economic outlook. The Fed sees the impacts of this as being limited. You could see it in their GDP forecast yesterday. The 2023 growth forecast was revised down by 1/10, and the 2024 forecast by 4/10. So that's kind of their preliminary assessment of the magnitude of the the effect of the events of the last couple of weeks. The markets are looking for something much bigger than that, I think, in terms of downward influence.
When are we going to see the economic data start to matter? I mean, I know that we began that at the outset, and people would say, well, when the banking issues have been resolved or we have some sense of the scope of them, is there a data point that we're looking for that will take on importance regardless of what the backdrop is in the banking sector?
Right. Well, I think that the headline economic indicators are still going to matter. So employment reports, CPI, maybe to an extent consumer spending, those are the ones that have really driven things in the past. And so a lot of the other second tier indicators that we watch, not that they're irrelevant, but they're just maybe not enough to kind of break through the heightened level of noise right now. I think the other point I would make is that as the banking situation hopefully calms down, the data will become more important, right? Because right now, people are of the mind that we're looking at a totally different economic situation in 2, 3, 4 months' time, and it will take time for that to play out. But if indeed it's closer to what the Fed has suggested or what I'm suggesting, then the banking situation isn't necessarily going to dramatically change the trajectory of the economy. And therefore, we get back to kind of business as usual in terms of watching the key indicators that have been driving Fed policy.
Stephen, before we let you go, what do you think the terminal Fed rate policy is going to be at this point, given the last couple of weeks?
Yeah, I haven't moved. I mean, I'm at 5 3/8. I would say it's either 5 1/8 or 5 3/8, depending on on how much this banking situation continues to be an issue, and how quickly that makes its way into the economy. But I would say, unless we see a miraculous fall in inflation, the big difference I would take with what's priced into the market is more in terms of this pivot idea. I just think the Fed is going to be on hold until inflation gets down to something much closer to 2%, and that's, I think, going to take a while.
Stephen Stanley of Santander U.S. Capital Markets, thank you so much for being with us. In other economic data, Sonali Basak here with the banking update. It does seem like this is the economic data point of the moment, which is bank stocks and how much fear there currently is in the system. I'm wondering, it's not just traditional banks. If you look more broadly, where are the nodes of concern currently focused?
The traditional banks are still certainly of focus because you do have these banks not only lending to small communities, but remember those small businesses were huge job creators in the United States that have faced pressures back to 2020, Lisa. We have to remember when we came into this, how much pressure those businesses were still under even before any kind of credit crunch even started. Now, if you look at what has happened into the most recent weeks, you have Torsten Slok at Apollo saying credit conditions were tighter than they were since 2008, even before this banking crisis most recently started. There's some silver linings here. You think about what Jane Fraser told David Rubenstein last night about this idea about a few more banks potentially facing more pressures in the near term, but that not creating necessarily a nationwide credit crunch. And what that implies here is that there can be some more strain among these smaller banks without these systemic ripple effects, but that doesn't mean, to your point that you've been making, that credit won't be as easily available. It won't be as easily available as it had been in the past.
How does crypto fall into this? Because to some degree, Silicon Valley Bank was somewhat connected to it. We've seen others that had similar types of exposure. Now there's Coinbase that received some sort of SEC notice. Is there a unifying thread through these stories?
I think you have to look at them one by one only because it is the time to parse your client base, to parse their exposures and see what is going to make it through this crisis. Take PacWest for a moment here. You see that a lot of their deposit base was tied to the venture-backed community. They faced about 20% of their deposit outflows this year. A lot of that because of that venture tie. It wasn't enough to create really significant strain that you saw at some of these other firms, but then you look at First Republic, also kind of this California profile here, facing these dire strains at a much more massive scale. So we can say that we can loop these all together in one big basket. I think that's imprudent because you're seeing each of these firms face different lifelines from different types of investors.
Sonali, what are you watching in the days ahead?
Loan officer survey. Who's not?
Exactly. It seems like it's what is on everybody's mind. Sonali Basak, thank you so much for being with us. Right now, we are looking at markets that have a lift, a bit of a reprieve after a couple of days of turmoil. Although we have seen that grind higher. It's almost as if people want to look past whatever is to come. People keep talking about potential weakness, and everyone keeps saying, no big deal. Right now, we're seeing the NASDAQ up about 0.9%, the S&P up about 0.5%. Yields just a little higher, no drama, even after better than expected data on the employment front, lower than expected initial jobless claims. Again, it's pointing to this robust labor market and a resilient economy. When does that change? This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Worries over inflation trumped the recent banking turmoil as Fed Chair Jerome Powell rejected the idea of rate cuts and said that more tightening may be ahead. Wednesday's quarter-point rate hike comes less than 2 weeks after the second biggest bank failure in U.S. history. The takeover of Credit Suisse has the big banks putting their de facto hiring freezes on hold. Bloomberg's learned that firms such as Deutsche Bank, Citigroup, and J.P. Morgan Chase are preparing to hire some of the Swiss bank's investment bankers and wealth managers. Talks have begun in London and New York, and some headhunters are even flying to Zurich. In France, more strikes are set against President Emmanuel Macron's push to reform the pension system. Public transportation, schools, and refineries are likely to be impacted. It's now been more than 2 months since French unions began a series of walkouts and marches. Macron wants to raise the retirement age from 62 to 64. Tesla has started a price war in China that's set to reshape the world's biggest car market. Elon Musk's electric car maker has cut prices twice since October. That's made some Tesla models almost 50% cheaper than in the U.S. The moves left rival EV makers in China with little option but to follow suit. At least 30 have cut prices. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Okay, so you're moving in on me. Quick. Distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
System is pretty sound, and we're talking about a few banks. We heard it from the chairman Powell today. This is not something that is spread across the entire banking system. This isn't like it was last time. This is not a credit crisis. This is a situation where it's a few banks.
That was Jane Fraser, head of Citigroup, speaking yesterday with David Rubenstein of Peer-to-Peer Conversations, as well as, of course, Carlisle down in Washington, D.C. This has been the big concern for a lot of central bankers coming out and saying that their financial systems are safe and sound and resilient. Norway hasn't had to deal with that as much. There hasn't been as much of a concern about Norwegian central banks. And sure enough, Norway's central bank came out this morning and raised rates by 25 basis points, the highest rates going back to 2009, and had a pretty hawkish tone. Joining us now to talk about it, I'm so pleased to say, is the governor of the Norges Bank, Governor Ida Woldenbach. And I'd love to get your sense, Governor, first of all, was there any discussion about going even further than 25 basis points to even 50 basis points based on just how hawkish people thought the statement was?
Well, obviously, we always have good discussions and consider different alternatives. But when we met yesterday, the decision to raise policy rates by 25 basis points was unanimous. We are also signaling that more hikes will likely be needed to curb inflation. And most likely we will raise the policy rate again in May and then further to 3.5% in summer.
How much of a green light were you given by the fact that there has been some krona weakness, that you could basically see some strengthening, and it would be a positive? It would actually bring down inflation. And so to be more aggressive at a time where there is this policy divergence in other regions of the world was a positive.
Now, obviously, the krona exchange rate, although we do not have a target range for the krona exchange rate, we have a floating currency. It matters for inflation in a small open economy. So the fact that we've seen a quite significant depreciation of the krona was one of the reasons why we now think it is necessary to hike more in order to get inflation back to target. Now, the currency going forward, there's considerable uncertainty about the outlook for the currency. But if the krona will become weaker than projected, then that could also call for a higher interest rate going forward.
So that is something that it's a consideration, an active consideration. Is there a particular level that, for example, the euro-krona match pair would be something that would be concerning for you, or on the flip side, would be the appropriate level of strength to offset some of the inflation that you're seeing?
No, so we do not have a target range for the krona exchange rate. That's one of the factors that we are considering when we're making our forecasts and making our interest rate decisions. And our forecasts are based on an assumption that the krona will appreciate somewhat going further. But if it turns out that it remains weaker than projected, then could in isolation point to a need for larger rate rises. But obviously the outlook is uncertain and we will always take into account a whole range of factors affecting the outlook before making a decision.
One thing that the central bank has talked about is the potential for a wage price spiral, and this is something that a lot of people have speculated on. Could we be getting into that kind of 1970s type of behavior? What would you have to see to make sure that you're not in some sort of wage inflation spiral?
So we're not seeing that now, but we are seeing that wage growth is on the rise. And expectation for wage growth this year have been revised upwards. We're expecting wage growth of around 5% this year. And obviously that is one of the reasons why we expect, without a further tightening of monetary policy, inflation to remain high for some time.
Do you see this inflationary push as something secular, that is something that is global and has not been stymied by the recent turmoil that we've seen in certain select pockets of the banking system?
I think the more underlying drivers of inflation before the pandemic and what a reversal of those drivers would mean going forward is a matter that is creating uncertainty about the outlook. We must be prepared for greater volatility in prices, and we will be prepared to do what we need to do in order to get inflation back to target.
Governor, how much do you look to other central banks around the world to determine your policy rate? How much is it important to understand whether if the ECB is raising rates, then you also have to raise rates in tandem because of the currency differential and because of just where we are in the inflation regime?
We are setting interest rates on the basis of the outlook for the Norwegian economy and for inflation in Norway. But as a small open economy and thereby the exchange rate matters for inflation, what other central banks do does matter, but there's not a mechanical relationship between the decisions taken by other central banks and our interest rate decisions. But what other central banks do will be one of the factors that we take into account when we make our decision.
Based on what you have seen over the past couple of months, do you think that it's more likely that you get to 3.5% for the sort of terminal rate, or that you get, basically even further because of some of the wage inflation and other pressures?
I think there are risks on both sides of our interest rate projection. We have not yet seen the full effects of the tightening that we have behind us. And we are expecting high inflation and higher interest rates to curb household spending. To what extent is still uncertain. And we are basing our forecast on there not being a significant tightening of financial conditions globally as a result of the recent turmoil. So there are risks on both sides of our interest rate projection, and the krona exchange rate is one factor that we will also be monitoring closely.
Governor Ida Woldenbach of the Norges Bank, thank you so much for being with us today after the rate decision earlier this morning. It seems like we have seen this ongoing divergence. Michael McKee tracking it all, Bloomberg economics and policy correspondent who joins us now. Mike, it seems like that's the takeaway over the past couple of weeks, that there does seem to be, under the covers, a bit of a divergence where you still see a hawkish tone from European banks, and the Fed perhaps already seen the rate hiking cycle end.
Well, the Fed's very close to the end. They already think they're at least at restrictive, if not above it, and they want to get a little bit above it to bring down inflation. whereas the European Central Bank and the Bank of England may be a little bit farther behind. I always want to separate out the Bank of England because they have a different problem than the Fed and the ECB in that they're dealing with some of the after effects of Brexit, and they've got labor shortages because of that. They've got supply chain problems because of that. The ECB is really dealing with an energy-caused inflation spike, and the U.S. has a mixture of that and supply chains, but leftover stuff. And now they're trying to bring down inflation with high rates. They move first, so they're already there. The ECB is catching up fairly rapidly. So I think at this point, though, it is the Fed's that's closest to the end.
How much do you think that Jay Powell talks to Janet Yellen?
They talk at least once a week, we know. Beyond that, I'm not sure. And obviously, in the last 2 weeks, they've probably talked to each other quite a bit. Yesterday was kind of a confusing day, and there were a lot of mistaken impressions left by Yellen's testimony. The medium-sized central banks, you remember, sent the Treasury a letter saying we would like a blanket insurance policy for our banks for up to 2 years. And basically what Yellen was saying is we're not going to do that because that requires Congress to agree unless we decide there's a systemic emergency, and we don't think there's a systemic emergency right now. That just got reported as Yellen says there's no bank insurance coming, and that really upset investors when Powell was trying to say at the same time, your savings are safe. So there was some confusion there, I think, caused in the translation that the Treasury Department didn't really mean, and that's probably why they hadn't coordinated those thoughts between the two.
Michael McKee, thank you so much for that and for ongoing coverage throughout the week. In the tumultuous time, we were expecting this rate decision. It was very hyped up. It came out as dry as stone, which is exactly what he wanted, and then it was muddied by Janet Yellen's discussions. We're going to keep that conversation going. Coming up on Balance of Power on Bloomberg TV and on Bloomberg Radio, Congressman Brendan Boyle at 5:30 p.m., a Democrat from Pennsylvania, also talking about what the potential is for deposit insurance, very much a focus on that, as well as on the Tic-Tac hearings in the House, which we were just talking with Senator Warren about. Right now in markets, you are seeing a bit of a lift. There has been an ongoing sense of optimism in markets despite some of the bearish commentary on where this economy is going and perhaps a greater likelihood of a hard landing with rate cuts now priced into the market. From New York, this is Bloomberg.
You've been an advisor to the President of the United States on infrastructure and manufacturing, but on infrastructure, you've been involved with the legislation that was passed not long ago. Why is the United States infrastructure so terrible compared to so many other wealthy countries?
I have been around U.S. politics like you for a couple of decades and have served a variety of presidents from the different parties. And the attitude in the United States is obviously to keep taxes low and keep the public spend under control. And the word control is interesting, but that stops forward thinking in terms of planning, and therefore the short-termism around our fiscal policies has hurt us. I mean, in essence, infrastructure is a long-term return, and to get a long-term return, putting it into private hands is one way of doing it, but really the public side of life has to be willing to do the forward spend. The forward spend on airports and roads and EV charging stations has to come from the public domain. Now, raising taxes to spend money on infrastructure means you've got to trust the people doing the spending. And I think the public-private model is the way to go there, which is actually create an infrastructure bank that is U.S. public sector owned that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States. So where we go is tax and spend, which unfortunately one side of the aisle disagrees with.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting. and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
This is Bloomberg.
If you thought yesterday was messy, maybe you can blame the Treasury Secretary and not the Fed chair. We'll get into that. Equity futures trying to bounce up 0.5% from New York City this morning. Good morning, good morning. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York, coming up, Fed Chair Jay Powell opting for a hike-and-see approach. Secretary Yellen ruling out blanket deposit insurance as First Republic receives another credit downgrade. We begin with the big issue, split-screen confusion in D.C. Chair Powell looking to restore confidence.
You've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
That was around the same time Secretary Yellen was on Capitol Hill saying this.
We've not considered or discussed anything having to do with blanket insurance or guarantees of deposits.
Those comments coming a day after this.
Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
So what's the difference? Well, there's a pretty big difference. Possibly using the systemic risk exception again for smaller banks, which would indeed make all depositors whole, is very different to considering blanket guarantees. And that's the point of tension that kept Secretary Yellen under pressure just last week.
Every community bank, regardless of the size of the deposit, will they get the same treatment that SVB just got?
A bank only gets that treatment if the failure to protect uninsured depositors would create systemic risk.
Team coverage begins right now with Bloomberg's Anne-Marie down in Washington alongside Katie Lyons. AMH, how do they resolve this one?
Yeah, Jonathan, you're calling it chaos and confusion, this split screen, but also it was a coincidence. She was testifying on a subcommittee on appropriations. It was supposed to be at the 2024 budget. They usually don't like to put Yellen out in the same day Jay Powell, the Fed chair, is speaking. The point of that tension you described perfectly. Secretary Yellen was asked about Congress and whether Congress had this authority to do this. And what she was trying to say is that they had to step in when you have the supermajorities at the FDIC, at the Fed board, herself and the president deeming that this could potentially be systemic risk and contagion and more bank runs. They have this emergency authority to step in. What she was trying to make a point is that they are not looking at a blanket insurance deposit. Our reporting, though, shows that what they were temporarily doing, some officials behind the scene, was due diligence, looking at potentially what they could do, emergency powers they may have to temporarily lift the FDIC limit.
Kaylee, none of this bringing FRC much comfort.
Yeah, well, it certainly didn't yesterday, where the stock dropped almost 30% after Treasury Secretary Yellen spoke. Interestingly, you are seeing a bit of a bounce in pre-market trading this morning. That may mostly be technical. The stock is up about 7% right now before the bell. But there raises a question of whether this might be one of those banks that does get that exceptional treatment, even if nothing blanket is going on, considering it has been such a point of contention and a focus not just for the U.S. government, but for major Wall Street lenders as well. Now, of course, all of this said, we did get yet another downgrade for First Republic yesterday, the fourth in the span of a week. This one coming from Fitch, cutting the credit rating to B from BB. The analysts over there saying that the bank's funding mix has been materially altered over the last 2 weeks, as withdrawn deposits have been replaced with costly wholesale borrowings, largely from the Fed discount window. And Fitch says due to those higher costs of funds, FRC is currently operating at a net loss that is not sustainable over the longer term, absent a balance sheet restructuring. So that is not a great outlook. And clearly, while it's not weighing on the stock this morning, it only goes so far, the gains we're seeing today, to undo the pain we have seen over the course of the last 2 weeks. This is a stock that remains down 89% over the last 13 days. The smallest move we have seen on the day over the last 2 weeks, John, is a move of 10%. Just incredible volatility with this.
Brutal volatility. To the two of you, thank you. Kelly Lyons and AMH there down in Washington, D.C. First Republic right now in the pre-market, as Kelly indicated, up by a little more than 6%. Joining us now to discuss, PGIM's Robert Tipp, Kathy Jones at Charles Schwab. Kathy, slightly unfair of me to ask a bond investor about this, considering what's happening in bank equities, but I think it applies. Can we resolve these issues without blanket deposit guarantees?
Oh boy, I think so, and I think that that's the effort that is taking place right now. I'm sure behind the scenes, a lot of conversation about this, but look, banks need to resolve the tension between the outflow of deposits and what's on their balance sheet. They need to build liquidity. Traditionally, or in the past, I should say the savings and loan crisis, we did have to go through a pretty painful process of closing down a lot of institutions, merging them, and that tightened credit considerably. I think that's probably the closest analogy to what we might have, and that was actually probably much more severe than what we're facing. So I think it can be done, but I think a lot of work has to go into it, and the big difference now is we have much more social media attention to it, much more immediate reaction than we probably had in the past to these sorts of incidents. And that makes it complicated because that starts the deposit outflows, and it gets to be a really difficult thing to catch up on.
The speed of it's happened so quickly. Robert Tipp, it's just a couple of weeks. That's all 2-3 weeks of this really starting to build. Robert, when you think about that, the speed at which it's happened, can this end without a big policy circuit breaker?
Well, I think it can. It's not going to be comfortable. But I think we got the signal from them on the way this unwound with SVB that they could see the end game here. I mean, the good news with SVB, when that was unraveling, I said, oh, great, it's a Friday. They can mop this up over the weekend. And they came in during the middle of the day because they knew they had other fish to fry over the weekend. And I think they've had a lot of firefighting experience with the GFC through the COVID crisis. But banking, the good news here is that asset quality is pretty good. Capital levels are pretty good. But banking is a confidence business. And they could see that this was going to rip through the system. If there was a loss of confidence, it would go through the regional banks, go through community banks, and then it would come to the money center banks. And it would start with the weakest and make its way through them. They had to act forcefully. And I think they have the capability, bank by bank, if they take them under, to guarantee deposits if there's systemic risk. And any bank at this point, in my opinion, is systemic risk, and they know it. So I think they're on the case. I think they'll be able to do it without the blanket guarantee, and I think that's a good thing because I don't think they can get it.
Well, Robert, if it is resolved, and even if it is resolved, overwhelmingly the consensus view on this program has been that it will inevitably lead to tighter lending standards, tighter financial conditions regardless. Now, Kathy, with that in mind, for the Federal Reserve, they've got to make their mind up. Is this mess a substitute for rate hikes? To some extent it is. To what extent is it?
Yeah, that's really tough to measure. I mean, we've been trying to do some estimates, but it's really tough to measure at this stage of the game. Frankly, had I been at the Fed with a vote, I might have voted to pause yesterday just to get a handle on that specific issue. How much tightening are we going to see in credit conditions as a result of this? It's got to be the equivalent of a couple of rate hikes, 25 basis point rate hikes. I've seen estimates as high as 1.5. That sounds a bit high to me, but it does depend on how it plays out. But what we've already seen is that credit conditions were tightening. The senior lending officers' surveys have shown that for over a quarter, about 2 quarters, we're seeing indications in the financial indexes, financial conditions indexes. So we've already seen this trend begin, and now it probably will accelerate because any bank that's looking at their loan book and looking at their deposits has to be more cautious, has to be more careful, probably will pull back on some lending, and that will ripple through the economy, small and medium-sized businesses in particular.
So, Robert, what's the difference between wait and see and you're done? Is the Fed done?
That's going to depend on how this goes. And I think that, the standard view on the lending is that they can't lend. They're worried about whether they have enough money to meet their deposit needs. They can't be sending it out the back door to loans that they've committed to in the past or that they might commit to in the near future. So it's going to hurt the economy. People are estimating could be 0.5%, could be 1.5% that it takes down GDP. And, it's increased expectations for recession. I think, though, last year we had a huge retrenchment in residential real estate that subtracted about 1% from GDP growth, and the economy kind of powered through. So you may see some resilience above and beyond what people think. But to me, the punchline here is really this is kind of a bond market nirvana. The Fed is up in the zone of being done. Interest rates have traversed from being at 0.5% on the 10-year, 1.5% into the 3s. I think they could drift up towards 4 or so again if there is not a recession. But big picture, yields are high, and this market's going to be well supported. People are going to be reticent to go into stocks. I think you're looking at a good environment here for bonds, and people shouldn't lose focus on that.
Well, I'm looking at claims from this morning at 191. I'm sitting here thinking, is anyone else looking at claims, Kathy? Because I don't think people will look at the economic data in quite the same way over the next month. Between now and early May, which is how much time we have left before the next Fed decision, when they say they're data dependent, and Kathy, I've asked this a few times, I'm sure you've heard me do it, what data are they dependent on between now and May?
That's a great question. Clearly the employment data continue to be important, and more specifically, I think, than jobless claims or even the JOLTS numbers these days is probably the wage numbers, and because that's the ultimate measure of how tight supply and demand, the imbalance is in the labor market is how high are wages growing. And they have decelerated. They've started to come down. I think most of the indications are that that's likely to continue. So on the jobs end of things, I think the wage data continue to be really important. But then they have to look at the other financial conditions and what's going on there. And that probably is going to send a much more negative signal on the economy. So I think that this is the tension that showed up in the press conference and in the meeting yesterday. I think that's a tension that continues to drive the market going forward. But I would agree with Robert. I think that this is a great environment for bonds. I don't see 4% again on the 10-year. I think that I think we're looking at lower yields as the year progresses. We might bounce around a little bit here and continue this volatility, but I don't see 4% coming back again.
I thought you were going to say low for longer, and that would open up a new conversation. Kathy, we'll come back to that in just a moment. Kathy Jones, Robert Tibb on this bond market. Neil Dutta of RenMac had this to say yesterday afternoon, just on the wait and see stuff. He said, when uncertainty is high, policymakers enter wait and see mode. We're discussing that. We only get one jobs number between now and May. It is unlikely that's enough information to decide. For that reason, some people are leaning to the idea that they're done, at least for now. And in May, they're going to be on pause. We'll come back to that later. Let's get you some stocks on the move. Futures positive 0.4%. Here's Casey.
John, let's kick off with Coinbase because it's absolutely plunging pre-market. That's after it said in a filing last night that it had received a Wells notice from the SEC, which basically said that the regulator plans to sue the exchange. It said in that filing that the notice regards aspects of its listed digital assets and its staking service. You can see shares down about 18% right now. Moving on to earnings, Chewy under pressure pre-market. It delivered a downbeat outlook for its sales growth. Also, fiscal year margin seen as flat to down slightly. You can see shares down by 4.5%. General Mills, different story. It was a beat and raise quarter. The company boosted its adjusted EPS forecast for the full year. You can see that's boosting shares. And NVIDIA, this stock has absolutely been on fire. It's up about 130% from its October low. Got a price target upgrade from Needham this morning, and shares are on track to rise for a 9th straight day, John.
Katie, thank you. We'll come back to you around the opening bell about 15, 16, 17 minutes away. Futures positive. Coming up on this program, Chairman Powell attempting to reaffirm his fight against inflation.
The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
That conversation up next.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Inflation pressures continue to run high. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
Chairman Powell speaking in Washington, D.C. following that decision to hike interest rates by 25 basis points. Mike McKee joins us now. Mike McKee, your take on that story yesterday?
Well, I think, John, what we're seeing is sort of a two-track policy by the Fed. Jay Powell made it clear that they don't know what's going to happen with the banks. They expect some credit tightening, but they can't measure that in terms of how much. And so they're going to keep on dealing with inflation because inflation remains too high. That's his key point from a monetary policy stance. They may raise rates at least one more time, he said, and he emphasized the word may as they try to tell everybody they're going to be data dependent, but they are going to leave rates high. And he did say to me that no interest rate cuts are planned, despite what the market seems to think at this point. And the evidence that we have at the moment is that's probably the right way to think about it, because we're not getting any evidence that the economy is significantly slowing, at least not from jobless claims this morning. They come in at 191,000, as you were talking about. We're right in a range. It just really hasn't changed all that much. The layoffs that we've seen announced haven't started hitting the economic data, and it'll be interesting to see how long it takes before that happens, if it even happens. So from here, we go on, we take a look at the inflation numbers ahead, the jobs numbers ahead, and here's, John, your new favorite economic indicator, the survey of senior loan officers by the New York Fed. They ask bankers around the country once a quarter whether they are tightening lending standards or not. And you see the blue line there shows those who say they have range for an economic slowdown. But the white line there is the people who have tightened significantly, only 1.5%. The next report will come out sometime in April, and we'll see if that number goes up a lot, and then the Fed will have some sort of idea of what the banking situation means to their monetary policy path.
Mike, I'm so pleased you pushed that forward in such a fantastic way. Mike McKee, thank you, down in Washington. Off the back of the question Kathy and I were trying to explore just moments ago about, Kathy, what data we are dependent on. When they say data dependence going into the May meeting, it doesn't feel like it's CPI or payrolls. Kathy, it feels like it's loans and the loan survey that we get.
Yeah, absolutely. I mean, this is what's going to drive the economy one way or another going forward. I mean, credit availability is always a crucial indication of where the economy is going. You know, and in periods where credit is widely available, standards are loose, as we've had for quite some time, you get a lot of expansion in the economy. And we've turned that corner. We turned that corner last year, late last year. The question is now, how fast do we go from here in terms of tightening credit standards and tightening credit conditions? I think that it goes fairly quickly because of what we've experienced in the last couple of weeks. Anybody running a small to medium-sized bank, let alone a large bank, has got to be looking at this and saying they need to be cautious to avoid being the next one that gets a run on the bank and has to go to the Fed, the newly created BTFP, I can't remember the acronym now, but the newly created program where they can pledge the assets and pay 10 basis points for it. Now, nobody really wants to be the one that has to go there.
Kathy, there's too many acronyms at a time of crisis. We know that, and I forget them all as well. Robert Tibb, let's talk bonds. Bob Michael, JP Morgan Asset Management, came on this show and he said the whole curve, 2s out to 30s, 3%, 3.00%, not just a three handle, 3%. Robert, can we get that low?
But it's possible. I think if you have deposit outflows, if you have a big drop in lending, you have a deceleration in the economy, you have inflation pressures coming off, there's no question you could end up that low or lower, but that would be a plausible place to end up if the economy was really weak and we're seeing the inflation pressures come off. I think what the first area of resistance, I think that the Fed is going to be watching, coming back to your question on what data, I think, first and foremost is going to be deposits and whether they're staying in the banks. And if they get past that hurdle, if they get that to stabilize, then they can start thinking about the loans. The other major thing will be consumer confidence. Is spending stopping because of what people are seeing in the headlines? So I think they're going to be paying attention to that. That's going to keep them on hold for, say, 60 days. I think one of the things we're seeing come through in the market, though, that's going to, if it works, if optimism stays reasonable on the economy, it will be good for, say, high-yield bonds, but it will also be good for shorter-term investment-grade bonds. So your first 1 to 5, 1 to 10 years of the curve, those are going to be kind of your sweet spots. I think your long-term high quality could be under a little bit of pressure. That is, the Fed is clearly turning their focus to growth, making sure they support the expansion. By necessity, they have to reduce their focus on inflation for now. And so I think the back end of the curve, you're going to see a little bit of weakness in the back end of the curve. And even if you do get a cut in short-term rates, which I'm not expecting, I think you could have some upward pressure in rates. And if it turns out that the Fed is able to hold at these levels, or they're going to end up going back to hikes later on, which I know seems completely crazy at this point in time, then, you could end up with higher rates. But, in the late 90s, there were cycles where they'd hiked a lot in 94, and they ended up, with some up and down movements around that terminal rate. We could end up with a scenario like that.
Robert, I'm happy you brought it up. It does sound crazy to some people, but you've got to remember 2 weeks ago we were talking about no landing. You get through a couple of weeks without a bank failure, you see a market start to rally again, you see some decent data, this narrative will shift back pretty quickly if that takes place. Robert, thank you. Robert Tibb, Kathy Jones, to the two of you. I think it was Jeff Rosenberg of BlackRock who said yesterday, remember the risk cuts both ways. The risk cuts both ways. Coming up, the morning calls, and later, why David Bianco of DWS expects the banking turmoil to have long-lasting implications. Plus, BNP's Sam Linton-Brown discussing the key differences between the Fed and the ECB. That conversation coming up.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Or 5 minutes away from the opening bell, equity futures positive 0.5% on the S&P. Let's get you some morning calls. First up, Deutsche Bank downgrading Chewy to hold after earnings, expecting user growth to remain tepid throughout the rest of the year. That stock's down 4.5%. Citi upgrading Marathon Oil to buy, naming the stock one of their top picks due to its improving outlook and upcoming positive catalysts. And finally, Oppenheimer downgrading Coinbase to peer perform, growing more concerned about the company's outlook after receiving a Wells notice from the SEC. Coming up, focus remaining on the financials. David Bianco of DWS explains why bigger is better when it comes to the US banks. That conversation coming up next. Your opening bell just around the corner.
be, Ari Emanuel, when I grow up? What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
All it takes sometimes is a couple of days of gains on the S&P 500, no talk of imminent bank failure, and people will start to say crisis over. It's too soon. Equities right now, positive 0.6% on the S&P. On the NASDAQ, we're higher by a little more than 1 full percentage point. Yesterday was tough. It was difficult. We had a down day. Let's see if we can bounce. There's your opening bounce. Switch to the board and get to the bond market. Yields look like this on a 10-year, higher by 3 or 4 basis points. Just sub 350 at 446.96, 346.96 on a US 10-year. On the FX market, or rather in the FX market, the euro against the dollar, euro-dollar 108.89, positive 1/3%. Stronger euro. We were through 109 a little bit earlier, looking for an ECB to keep on hiking and maybe for a Fed to pause. That's an interesting development in the last week. In the commodity market, crude positive 1/3%, $71.14. About 30 seconds into this session, your stock market looks a little something like this on the S&P, positive 0.75%. On the NASDAQ, up by more than 1%, higher by 1.24% at the moment. One sector to watch at the open, the banks. Coming off another volatile session of steep declines after Secretary Yellen pushed back against blanket deposit guarantees. First Republic rebounding despite racking up yet another credit downgrade, this time from Fitch, saying that its balance sheet is not sustainable. Katie Lyons, brutal for this bank over the last few weeks.
Yeah, brutal indeed, John. And I would just caution, as we look at an opening move that is to the upside by about 9% this morning, we haven't seen 2 back-to-back updates for this stock in about a month. Every day we see a gain, it is followed by a loss, and in recent history, usually a steep one the following day. So just keep that in mind as we take a look at the gains today. It is up about 9%, but that follows a 15% loss yesterday for PacWest, which is up by about 4.25%. It was down 17% after not only Treasury Secretary Yellen's comments, but also disclosing that it's seen about 20% of its deposits flowing out over the last several weeks, hence why they had to tap Atlas for $1.4 billion in cash. Just to zero in on First Republic, though, because as you mentioned, John, it got hit with yet another credit downgrade yesterday, the 4th in the span of a week. We can just see how this has been an incredibly volatile stock of peaks and valleys altogether over the last 2 weeks, down about 90%. And the future of this bank still remains very much in question. We know that the government is working with Wall Street, major Wall Street lenders, to orchestrate some kind of aid here further to the $30 billion in deposits they've already given. But this is a bank whose future still looks very much in flux. How much is that applicable to the rest of the regional banks, given that First Republic is seen as one of those that had more concentrated exposure, is an open question, but that it hasn't really stopped the regional banks from trading largely in tandem, and what that means is trading largely below, underperforming the broader financial sector, as this risk is still seen out there, even if things seem calmer on the surface, John.
Katie, let's get the tech names on the board as well. Let's look at Snap and look at Meta How important is this hearing going to be later on today?
Well, the hearing definitely will be important, but also if the ultimate outcome of this hearing or of legislation and Biden administration proposals that have been put forward results in a TikTok ban, that in theory will benefit the likes of Snap, Meta, and Alphabet. Of course, Chu is going to be testifying in about 30 minutes at 10 a.m. Eastern time. He is largely going to be faced with no allies in Congress who are very critical of TikTok and its owner ByteDance and the possibility that it poses a serious national security risk to the 150 million Americans that use it by collecting their data and sharing it with the Communist Party of China. So it's definitely going to be very contentious. And ultimately, if a ban is put into place, John, in theory, because TikTok charges less for ads, is able to snap up market share that way, and of course has a lot of eyeballs, it could benefit those other social media players. Our analysts here at Bloomberg Intelligence actually see YouTube as one of the biggest beneficiaries in terms of user market share. And of course, maybe other social platforms can snap up more ad dollars as well, John.
Katie, thanks for that. Let's get back to the banks. Truist cutting its price target on more than 24 bank stocks today, seeing potential upside for one name, writing the following: we are lowering our estimates to reflect lower net interest margins and higher credit costs. We continue to favor banks with conservative credit cultures, strong balance sheets, and see the most relative near-term upside in banks with dislocated valuations such as buy-rated Western Alliance. That stock is gaining, or rather KBW Bank Index right now is gaining by about 0.6%. That's the financials. Let's get to Tencent. Shares jumping the most since January thanks to fourth quarter revenue growth boosted by ad sales. Katie Greifeld has more. Hey, Katie.
Hey, John. Well, yeah, we've been talking a lot about TikTok this morning, but Tencent, to your point, is surging. Of course, this is China's leading social media company. And like you said, shares soaring after earnings and on unconfirmed reports that Chinese Premier Li visited Tencent's offices on Thursday. Again, this is unconfirmed. But remember, Li is Xi Jinping's top deputy after taking over the premiership in March. And he visited automaker BYD earlier this week. So a lot of speculation that he also paid Tencent a visit as well. And today's gain adds to a rally that's really been building for months. Tencent, it's gained more than $200 billion of market value since October's lows. And in recent weeks, as you can see, it's pulled away from the Hang Seng Index and currently up about 8% right now, John.
Katie, thank you. DWS's David Bianco expecting the banking turmoil to continue, writing this: small banks will remain challenged with big profitability pressures as the largest banks will take share. We are overweight the biggest banks in the United States. David joins us right now. David, I want to ask you this. Do you think we can resolve these banking issues, the financial instability, without blanket deposit insurance in this country?
I don't think that blanket deposit insurance explicitly is a good idea or necessarily the cure for the challenges that banks are facing right now. Now, obviously, the commitment and the legislation already exists that under a national emergency that all deposits would be made safe by all means of government. But I think what we've got going on here is we're moving past the panic, but there are still pains that so many banks, particularly smaller banks, will face on their funding costs. Yes, the net interest margins will continue to come under pressure. And we are concerned about regional banks and those that tend to go to them to borrow. But we're overweight the biggest banks because despite the best intentions, it looks like they're going to gain share. I would simply suggest that the Fed, we're confident in their ability to put out fires and deal with individual banks that might be problematic at a time. But I think they need to address the funding costs that so many smaller banks are facing right now. And the tool for that for over 100 years is the discount rate. And I'd like to see some divergence between the Fed funds rate to fight inflation and the discount rate, perhaps going lower or not going up anymore, to improve the positioning of bank funding costs.
What you're recognizing, David, though, is what a lot of people have seen. What they believe right now is that we have a two-tier banking system in America. You like the biggest banks in America for obvious reasons. Can you tell me what would make regionals investable for you?
Yeah, like I said, I think if the discount window, which is not only open wide, but if the discount rate were a bit of an advantaged rate to the member banks, and we strongly believe these are all assets that are good. This is an asset liability mismatch issue. So we think that not only should the Fed provide liquidity, but the Fed should also make sure that these banks aren't put into a greatly disadvantaged position to have to scramble for deposits and have to pay up, quickly to keep these deposits. If the discount rate were lower, it would give banks more time to reprice their deposits and to also reprice their loan books and securities books to get the higher yields. We're at the stage of this where it's not about liquidity, it's about cost of liquidity.
David, currently this Fed believes that this issue right now, to some extent, is a substitute for rate hikes. Do you agree with that?
I think the Fed basically said that. I think the Fed basically said that they expect and that they are willing to accept that challenges, especially at these smaller banks, will help them fight inflation. Well, this would be a concern to the banks and the communities that count on small banks. I think the Fed is saying they expect tighter credit conditions to be through smaller banks to be the transmission channel of their tightening policy. And if that's the case, and they're not going to do anything about it more broadly for smaller banks overall, then we have to expect that that smaller banks, their profitability will be challenged. And as I said, those that typically go to them for loans would be challenged as well.
Well, David, this is going to have obvious consequences for the economy. It's almost like don't believe your own eyes when you look at the bond market. The Fed's going to tell you rates are X, but we're going to know based on this that actually financial conditions are tighter because the supply of credit is going to get choked off by this situation. So when you think about the relationship between where rates are in the bond market, where Fed funds is, and how you think this economy is going to evolve, hasn't that just changed over the last couple of weeks?
Well, look, the Fed continues to say that the overnight rate is going to be 5% or higher, and that it will be a long hold at 5% or higher. And I think they've made it really clear that the bar for cuts is a high bar, which means either it's going to have to be an unmistakable recession breaking out, because I don't think they're going to be cutting, even modestly cutting, on just some kind of short period of evidence of disinflation. This has been the biggest inflation problem in 40 years. This is a stain on their records. I think what the bond market is saying is that I think the bond market actually hears the Fed on the high and long hold, but the bond market's probably saying, you know what, there's a 50% chance of that significant recession.
But David, I guess what I am saying is the Fed is saying 5, and they're not saying 550. But without this, they would be saying 550. But because of this, they're saying 5. But essentially, it's at 550. Does that make sense to you, David? What I'm trying to ask here is if they're at 5, you add on a layer of financial instability, this idea that the Fed's backed away and you can get long some of these assets because things are getting better, that's just not the way, I guess, the way I see it right now, David. Do you see it a different way?
No, I see it the way you're seeing it, that basically the Fed is accepting financial condition, particularly credit availability at small banks, as part of their inflation fighting arsenal. And, that just means you need to be careful with how you invest. It's a challenge to smaller banks. It's a challenge to those that go to borrow from them. That's it.
Is it a challenge to tech when you see the NASDAQ ripping because people believe the Fed's backing away?
The equity market has been remarkably resilient, but with a tremendous rotation from financials, from many value cyclicals, it's the revenge of big cap tech. Now, look, I would simply say I find the overall equity market above fair value. I think full fair value immediately is about 3,800 on the S&P, and that'd be full fair value. Maybe 4,100 a year from now, which is 18 times earnings that still have downside risk.
David, you're awesome. It's great to catch up. David Bianco there of DWS on this equity market. We are about 11 minutes into this, still positive, 0.75% on the S&P and the NASDAQ, up a little more than 1%. Coming up, global central banks taking center stage.
If we need to raise rates higher, we will.
On the basis of the last projection, it's still clear that we might have more to do.
And that conversation up next with BNP's Sam Linton-Brown.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So most actors are thrilled if they have one part like Rocky in their whole career.
Yeah.
You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No, Rambo was a novel by David Morrell. And I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone. And it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was, in the original screenplay, was horrible. He was a psychopath. He killed children, he killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And they said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy.
Because
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
The top names in business are on Bloomberg.
AI is real. We're already using it to do risk, fraud, marketing, prospecting, and it's the tip of the iceberg. This is extraordinary. And the other thing to keep in mind, there's good use, but bad guys are going to use it too. So it's a little bit of an arms race in how you have to use it to protect your company, protect your clients, protect data, et cetera. And we're fully engaged.
Nobody covers business like Bloomberg, your global business authority.
If we need to raise rates higher, we will. I think for now, though, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is.
Chair Powell committing to price stability amid concerns over a deepening banking crisis. This coming as the ECB says there's more work to do.
In terms of direction, if there is stabilization in the market, I think, again, on the basis of the last projection, it's still clear that we might have more to do.
The Bank of England making its own move today, raising rates by 25 basis points, saying the following: if there were to be evidence of more persistent pressures, then further tightening in monetary policy would be required. Lizzie Burden joins us now out of London, alongside Maria Tadeo in Brussels. Lizzie, 25, is that 25 and done or 25 and more to come?
Well, markets think that this is the end, and I've been getting the drip of economist notes in my inbox, and many of them think this is the end, including our in-house economists at Bloomberg Economics. I think that line that you picked out from the minutes you can read 2 different ways. On the one hand, you could read it as them saying it really has to be persistent inflation evidence for them to go again. You could read the vote split as dovish, because even the big hawk, Catherine Mann, has scaled back her vote to 25 basis points. But on the other hand, you could interpret them as saying, we've had this upside inflation surprise yesterday, we're keeping some powder dry, and you could interpret the vote split as hawkish because you didn't have John Cunliffe joining the dissenters as the economists had expected. I just would read the vote overall, the 25 basis points, as a compromise, because on the one hand they're showing that they're fighting inflation, on the other hand they're taking some of the advice of the Doves, Silvana Tenreiro and Swati Dhingra, that you need to be careful about the impact of previous hikes on the economy when it's already weak.
Maria, I have to say, listening to ECB officials, the hawks over there aren't in a compromising mood at all.
Absolutely not. And Jonathan, we've had this frenzy of communications from the European Central Bank. We've heard from the head of the ECB already 3 times. Remember, on the Thursday, on the Monday, yesterday in Frankfurt. And guess what? Tomorrow she'll be in Brussels. And they try to hammer down 2 messages, essentially. One is price stability and, of course, financial stability. There's no trade-off. They're going to continue to handle both. And that means, as you say, more hikes. Now, I think that takes us to a conversation on the forward guidance, which is at one point it was very explicit. Some of that has been muted, but you played that clip with the Belgian central banker yesterday. I spoke to Mr. Woods yesterday. He was very clear. You know, he is a hawk, and he was clear. Right now, we need to wait for the market to stabilize, but it is obvious that more may be to come. How much? That is the question. The other issue that I would just want to briefly point out and make you smile is European officials say they want to put this banking turmoil to rest, close this chapter, and they say for once it's not our fault. It was the U.S. regulators and the Swiss regulators that created this mess.
Hey, Maria, thanks for that. I think a lot of people are blaming each other at the moment. Maria Tadeo and Lizzie Burdett over in London and Brussels, respectively. Thank you. Sam Linton-Brown of BNP Paribas laying out key differences between the Fed and the ECB, saying this: Powell did not talk about separation principle. Lagarde did. This implies greater sensitivity for the Fed to financial stability concerns than the ECB. Furthermore, one could argue the outlook for inflation remains more uncertain in Europe. Sam joined us now. So, Sam, great to have you with us. The euro through 109 a little bit early this morning, just short of that now. What kind of levels are you thinking about?
Good morning, John. We think it will break 110 on a sustained basis. We target this year 114 in Euro USD. The move from here we expect to be more of a grind than we do a sharp appreciation. A key point for that bullish view, as you were just pointing out, is potential differences between the Fed's sensitivity to financial stability compared to the ECB. We heard a lot at the last ECB meeting about the separation principle. We didn't hear that at all yesterday from Powell. What we heard is that credit conditions have tightened. And so this suggests, and I think the market's perception is, that the Fed will be more constrained with rate hikes, because in the US, some of the financial instability we're seeing might be a function of more of a common problem related to mismanagement of duration risk, while in Europe, it's a little bit more idiosyncratic.
So, Sam, that's the rate differential story. What do you think that means for growth on either side of the Atlantic? How bad do you think this gets for the US versus how good do you think it's going to be for Europe?
Our expectation is that the US will enter recession. We think that will occur in Q3. We're not talking about a deep recession here. We think it's a shallow recession, about 1 percentage point of growth from peak to trough. We think it will last 3 quarters. In Europe, in contrast, we don't think there will be a recession. We think that risk has been avoided because of the energy situation having improved from very extreme levels before. And in Europe, you don't need a recession to get inflation back to target. In our view, you just need growth beneath trend for a sustained period of time. If I bring it back to the market view and euro dollar, I think that relative growth outlook is quite important, because it means we've got a situation where front-end rate differentials, which are usually in the dollar's favor, are beginning to compress. We've got a situation where growth in Europe is set to outperform the US, which favors rotation into European risky assets. And we've got a situation where the current account in Europe has also normalized, which means that the structural flow dynamic is quite supportive for the pair to continue trending higher.
So when you push all of this through the FX market, everything you've just said makes sense if it transpires, if it materializes, develops in the way that you explain. The tougher one for me at the moment, Sam, you had that big call on European banks, and I won't talk individual names with you because of the nature of your job. I understand the sensitivity of that. But just the banking universe in Europe, great trade when you made the call last summer. Sam, has the world changed?
The case is somewhat less compelling now than it was before, but we still think the sector's set to outperform. A key part of this is the valuation argument. That clearly is a well-told story, one in which valuations are at crisis levels. We don't think that's justified. The other element here is that you still have a tailwind from rates. Of course, given what's happened recently, there's some more two-way risk around that view, but we think nonetheless it's an attractive risk-reward to think that it's a sector that is set to outperform.
Sam, just the last question from me. When that headline, the US is in recession, comes through, we'll be able to see it before that headline ultimately drops. But when that growth experience becomes worse, when that headline crosses, or a series of headlines, whatever it might be, sentiment's going to get hammered worldwide, you'd think. And Sam, surely that's going to drive a bid into the US dollar. What's the argument against that?
The argument against that is the reason the dollar usually rallies and risk off is funding stress, that there's a funding squeeze, that people who need access to dollars aren't able to source those dollars at that time of peak stress. We saw that in 2008, we saw that during COVID. But the Fed have introduced a number of new facilities, and we've written quite a lot about that this week. Our head of macro strategy in the Americas, Calvin C., that the number of facilities the Fed have now introduced, and more recently making the frequency of FX swap operations daily, really preempts the potential for that funding stress to permeate into the market. So we don't expect the dollar to surge even when there are periods of financial stress.
Interesting. I've got to catch up with Calvin soon as well. Reminded me to do that. Sam, thank you. Sam Linton-Brown, BNP Paribas. Equities right now doing okay, up 0.9% on the S&P 500. Up next, your trading diary.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
So far, so good. It's a better morning. Let's see if this sticks. We're up by 0.9% on the S&P, on the Nasdaq by about 1.5%. That's the price action. Here's the trading diary. Coming up, TikTok CEO testifying on Capitol Hill at the top of the hour. Secretary Yellen continuing her congressional testimony at 3 p.m. Eastern Time. Plus, President Biden heading to Canada for a meeting with the Prime Minister, Justin Trudeau. Rounding out the week with Fed speak from St. Louis Fed President Jim Bullard on Friday, along with more economic data points, including US PMIs and durable goods from New York City. That does it for me. Good luck for the rest of the trading day, and thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
now? Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking, the bus was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance, is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech in right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign the ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, a language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings. As well as you're going to describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We got a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park. And inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. We have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one. And that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the, like, profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G, and it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference that causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers, and it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers over years now, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long, and as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. But there's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters off Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming in to our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Ina Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1996, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Ina wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Ina co-founded Eco Wave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Ina and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of
Machiavellian companies where, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act for this one. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared me. You scared my children. I worked in this for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn, and he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Pasi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to jail and charged him with financial misconduct crimes.
So what happened was a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Pasi was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hadi. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered for me the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Ghosn Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in,